Welcome to Financial Freedom Classroom for October of 2015. I am John Locke. I'm owner of a company called Locke in Your Success LLC. We trade stock options and we do coaching and education for the trading business. I am here with Sherry, who is my wife. She manages our business for us, and she has done a lot of other things in automotive, real estate, computer consulting, and coaching. We're also active real estate investors. We're active in spec home building. We do rehabs, rentals, and we provide loans and guidance to small businesses. Before we get going, we just want to make you aware that this presentation is general information only. We're not professional accountants, tax advisors, or attorneys, and therefore take any information and make sure before you apply it, make sure that you check with the proper licensed individual to make sure that you're doing the proper thing. And to tell you about tonight's webinar, I'm going to pass it over to Sherry.
All right, well, tonight we are starting out our holiday season with tax horror stories and how to avoid them. And just because we are not tax professionals, we do know some pretty great ones, and that is Kim Landry. She's with us tonight. She's the CPA of Landry and Associates. We've been friends with Kim for a very, very long time, and she provides a proactive approach to the taxes, and in most cases it's people's highest expense, so we really want to focus on that. And so I'm very excited tonight to hear some of her horror stories because I know that they're going to be awesome. And how to avoid them, certainly. So welcome, Kim.
Thank you, Sherry. I'm glad to be back.
We are glad to have you back. So you were very, very popular the last time we had you, so and some people were anticipating hearing you, so we're excited to have you.
Great, great. I hope I can pass on some useful information to your listeners tonight.
Always do. So one of the topics that we talked about going over was ruinous identity theft.
Ooh, I feel like we should have some background.
Actually, John might be able to grab our, we do have a little audio machine, so we'll see if we can grab that out and bring it out for the next one.
Cool. All right, all right. Yes, identity theft. That's a very hot topic. It can come in many forms. A lot of people kind of think of it as having to do with their credit and messing up their credit scores. This year we had some clients that were victims of tax identity theft, meaning when we went to file their tax return, surprise, surprise, tax returns were already filed on their Social Security numbers. I had a couple of clients that were wishing that they would pay their tax bill too, but that didn't happen. So again, people just need to be very vigilant that checking when they do get notified of a breach, figuring out where it is. Tax identity theft is huge with children and also with deceased taxpayers because Social Security numbers are right on death certificates. Another form of identity theft is somebody working with an unscrupulous tax preparer. There was a big case that came out actually today, and the headline is Girlfriend's IRS $3 million scheme in Raleigh, North Carolina. And they had a scheme of filing false returns, claiming refunds for taxpayers. Some of the taxpayers didn't even have a clue. So, yeah, so just be out there and be vigilant.
What are some things that people can do to I guess, be aware? I mean, it'd be kind of hard, I guess, if it's a deceased person, but how can you?
It goes back to it's to go back to the basics. Protect your records. Don't carry your Social Security card around with you. Don't give your Social Security card or Social Security number to anyone that doesn't need it. A lot of times, doctors' offices or whatever will put right on their application Social Security number. They really don't need it. So just be, diligent as to what you're giving over to people. Um,
Right.
a big one is just don't fall for scams. I know it's easier said than done, but right now there's a lot of threatening phone calls from people saying they're from the IRS and they need to hand over all this information, or somebody's going to be, knocking on their door to arrest them. And if people do get calls like that or phishing emails, they need to really be diligent about, don't just hit delete or, hang up the phone. Report it. And, try to do what we can to, protect, especially the elderly. They fall victim to these scams quite often.
So another quick question. What do you think about some of the monitoring services? Do you think those are helpful, or would you recommend those, or what do you think?
If you're vigilant about checking your own, the monitoring services are probably good. It's good to at least go in. You get a free credit report at least once a year, and there's 3 agencies. So, every 4 months or so, pull one of them just to make sure there's no suspicious activity. Again, all the junk mail soliciting credit cards and all of that information. Don't just throw them in the trash. Make sure they get shred.
Right.
And again, just be, if you're notified by somebody that, you do business with of a data breach, find out what kind of information was breached. Not all of them will result in an identity theft, but if somebody gets your Social Security, date of birth, and can come up with an address, they have all they need to file a tax return.
Right. It's funny because we have right next to our trash bin, we have a shred. We have a shredder, and literally every day I use the shredder and shred all the credit card statements that come in. And I think that's and your point is really good about you can do your own credit monitoring, really. If you can pull your credit report, you're probably doing exactly what the credit monitoring services are doing, right?
Exactly.
Yeah.
And just be, if you're applying for credit or what have you, just make sure you're using reputable businesses and making sure that if you're handing over that personal financial and Social Security number, date of birth, all of those items, that it's to someone that you trust and that where those papers are going and who has access to them.
Right.
Again, making sure, just even like a tax preparer, making sure that when you go in to make your get your taxes, make sure the person has the security that's required. When you walk in, are papers all over the desks, and those type of things.
Right. Ooh, that can be kind of scary. So
yeah.
The next topic, is there anything else you want to say about identity theft?
No.
All right, so I have my sound machine, but I'm looking at the pictures. I'm not sure.
Yeah,
no. I'm going to test it before we use it. So, okay, so let's go to the next one. Deadly audit findings. I bet this is a fun one for you.
Yes. I enjoy, the IRS audits. I found a funny little quote from a Seinfeld episode that said, a financial equivalent of an audit is a full rectal examination. So that, we all know that just probably wouldn't be pleasant, and there are tons of myths and horror stories. I think we all know somebody who's been audited, and it can come from all different areas. It can be something that's just a general, you won as I like to say, you won the IRS lottery and were selected. I always tell my clients it's the one lottery we don't want to win.
Right.
It can be as simple as not responding to an IRS notice when they send it to you. Unfortunately, a lot of people, they lead busy lives. They don't always tend to their mail on a timely basis. Things get thrown out. If you don't respond to an inquiry, it can escalate to an audit. And there's many cases when that that has happened. It can be simple as, they're not all IRS audits are, a full line-by-line encompassing audit. Most of the times it's a pick. If you're self-employed, they may pick 1 or 2 line items on your business schedule. Or if your mortgage interest that you're deducting doesn't equal what the bank sent to the IRS, you're going to get a notice. A big one, yeah, a big one I think for, a big one for a lot of your clients is the famous 1099 interest and dividend and sale statements that are sent out. People don't report those correctly, and those trigger audit, or at least a correspondence audit, because the records the IRS have versus what you send in don't match. If adjustments need to be made on those, it's best to either try to contact the issuer to get them corrected, or really talk to your professional about what's the best way to correct these things, because it can be a simple error, and it will take forever in time and dollars in order to get things straightened out.
Yuck.
Yeah.
Nobody likes that one. But I think, when you're talking about that, when you're talking about the line items, one of the ones, if we go on to the next thing, which is the home office deduction deception. So we were talking a little bit about this. So can you tell us a little bit about that?
Sure. One of the biggest things that have happened, I find, is I have a new client that comes to me, and they're a small business owner. They have a home office, and I say, gee, I noticed on the prior year returns you haven't been taking a home office deduction. And they're like, oh, no, I don't want to take that because I'm going to get audited if I take that deduction. And I'm like, no. Back in the day, there was an instance or a period of time in IRS history, shall we say, that the home office was challenged in court and the IRS won. So at that point, it did become a trigger for IRS agents to go out and audit people with home offices to make sure that they were doing it correctly. And then, lo and behold, it was challenged again, and the IRS lost. So, which was good for us and the small business owners. And now the home office deduction has really evolved, where the IRS actually has what they consider a simplified method for the home office deduction. They will give you $5 a square foot up to 300 square feet, or a deduction of $1,500 a year, without having to add up all your utility bills and keep track of all your repairs and maintenance and all of that. You still have to qualify, for the home office, but it really, the myths of it being complex and, that you must have a full room in order to get it, or you can't have another business location, or that it's going to flag you for audit. Those are all myths, and the home office gives you so much tax benefit. You can increase your mileage deduction. It takes some expenses that wouldn't be deductible, like your homeowner's insurance and utilities, and now makes a portion of that, tax deductible. So, as long as you qualify for that home office deduction, go ahead. You might as well take that deduction.
Yeah, well, I mean, if you do work at home, I mean, and it's, you have a home office, and then, I mean, it would, I mean, and as you're speaking too, it makes me think of some of the professional traders out there too that might have professional trader tax status that could be getting that too. So.
Yeah, definitely, and it also, if you're converting something into a home office, now you're looking at potential for office furniture, computers, printers, lamps. There's really, if you look around your office and say, hey, what's the value of this, and maybe we can get a deduction for it.
Right,
So,
right. And we want more deductions.
yes, yes,
As
there
many
doesn't
as
seem
we
to
can
be
get.
enough of them. Yep, definitely.
So anything else on that about the home office deduction?
Not that I can think of at the moment. I mean, it's definitely something that each individual should look at. I think one of the big misconceptions is that you need a full room to have that home office deduction. It doesn't have to be a full room. It has to be an area. It doesn't. The tax code doesn't say it needs to be a room. It needs to be an area that's used exclusively for business. So it could be a half of a room or a section that is designated the home office.
Right. Yeah, I mean, like, I just think about us. I mean, we have spaces all over the house. I mean, to be honest, I mean, I have my area, John has his area, we have an area downstairs for media, then when we do, you know, webinars and podcasts and stuff like that. So, I mean, we have areas all over the house, so
Correct.
it's more of an
So
office,
don't
I guess,
overlook
than a
that.
house. So another topic that we were talking about was...
Hold on, we got some music here.
Oh. John's got some music. I'm going to use some of my music in a little bit.
Okay, okay.
So what was that, John?
You don't want to know.
Okay. The costly misclassification. So we were talking about 1099 versus an employee, I believe, for this one.
Yes, we were. Really, this is kind of a trifecta. The IRS, the State Department of Revenues, the State Unemployment, and the Federal Department of Labor and State Departments of Labor are really working in conjunction with each other and have some new initiatives to crack down on this misclassification, because the fines, penalties, back taxes, it's a huge, huge revenue grab for whoever you know, discovers it. Right now, it's really costly for a business to misclassify these workers as consultants, per diem workers, contractors, when they really should be classified as an employee. It doesn't matter what you call them. It's really, you have to look beyond that, and there are several criteria that you need to look at. And the IRS is always going to look at, you know, substance over the form. You know, how much control do you have over somebody? Does that person have an economic risk of loss? Are they using their own tools of the trade, whether it's computers or hammers? Right now, in this last fiscal budget, they allocated $14 million to the Federal Department of Labor to detect this misclassification, and they spent $4 million of that to hire new and more investigators. So it's kind of a big money grab. And the tricky thing is the state rules and the federal rules can be different. So it really, I have a client that went under IRS audit, passed the IRS audit that these individuals were indeed subcontractors subject to 1099 issuing. The state said, no, they're not. They're employees for our state, and went back to the inception of the business to reclassify these workers, and they were looking for, you know, unemployment insurance, fining them for not having workers' compensation, back tax issued. It was something that would put this individual out of business.
Well, yeah, I mean, and realistically, when I think of, you know, 1099 versus employee, I'm always thinking federal. I'm not thinking necessarily state. So that's a really good point. And
yep.
Obviously, so how would a person who is well, I shouldn't say employing,
Mhm.
having someone do work, how would one check the rules in both the state and the federal? I mean, I guess you just have to look at the laws? Or?
Right, and it's definitely, something that it's not, you know, they want to look to a professional.
Mm-hmm.
Excuse me, somebody that has human resources. And as small businesses, we don't have the resources to have a full HR department and to really go through all of these. But you can hire an independent human resource company and have them come in and kind of do a mini Department of Labor audit,
Mm-hmm.
but they're working for you instead of the government. So find out what your deficiencies are. If you're not sure if somebody is a contractor or 1099 versus an employee, it pays to either consult an attorney, an accountant, or an HR specialist in order to make sure, because the penalties, if you guess wrong, can be huge.
Yeah.
And it doesn't, yeah, and it's always one of those things too where even if the person that's doing the work and the business owner agree, oh yeah, I'm a 1099, I want to be treated, it's a win-win for both of us, don't worry about it, let's just go, it always ends badly, especially when you don't want that person working, on your, in your business or, on anything, and you go to get rid of them. They usually run right to want to get their unemployment check.
Right.
So,
Oh,
and so that's where a lot of these things really come about.
Right. So really investigate with a professional if you
Mhm.
have somebody working for you to make sure that they are what you think they are, just to confirm.
Right, just confirm. And also, too, it's, another thing on the 1099 people, make sure you're filing those 1099s at the end of the year. That's another huge area. Make
Yeah.
sure that you have all of their, that they fill out the proper paperwork and that you can issue those.
I love paperwork. Okay.
Yes.
So the next one we have, okay.
Mhm.
I thought this one all by itself, the tax
Ooh.
evasion. We didn't need to have any scary words with this. So
No, I think everybody can kind of like,
this one stands alone.
Yeah, it does. It does. And, I tell my clients, the difference between avoidance and tax evasion, it's a very slim line. Tax avoidance is not a crime, but evasion will get you jail time. So again, it's make sure you're working with a credible professional, that you're not doing anything intentional to understate or omit any income. Make sure you're taking proper deductions, and really just think about what you're doing. A lot of evasion comes through illegal activities. That's one of the favorite, they can't get them on anything else to convict them of, a crime, but they usually get them on the evasion because they haven't deducted or claimed their income that they've made.
I don't think anybody on this call has
No. So, but I think my point here is just, don't be afraid to take those deductions that you are entitled to. You don't want to cross that line into evasion, but, don't leave money on the table.
Right. I mean, definitely, especially where, like I said, I'm sure you agree that taxes are probably one of the highest expenses a business can have, so.
Yeah, especially a service business.
Yeah, absolutely.
Yeah.
Okay, so, let's see. You ready for our next topic?
Sure.
Let's see what we got. Dangerous clients. Oh, I remember us talking about this a little bit.
Oh, yeah.
So
yeah.
The ones that you just sigh and say, oh, what did they do now?
Yeah, I always love it, the ones, the clients that always talk to their neighbors, and their neighbors always know the, best way to avoid taxes or lower their tax bills. Um, the ones that come in, shoe boxes, not so bad. But when you start coming in with, U-Haul trucks, those are bad, especially if you're coming in, a week before filing deadline.
Oh, yeah. We can get that
People,
estimate out like in an hour. Sure, no problem.
yeah, no problem, no problem. Again, ones that don't take our advice and, they go off on their own and think, oh, this is a client that I was working with recently that had some unpaid IRS taxes, and the IRS had levied them, and we got the collection proceedings stopped by the IRS. We were getting them into compliance, and I was talking with the IRS agent, and he says, oh, by the way, I'm not too happy that your client just opened up a new bank account in another company name and didn't notify us. So that was one of the ones where I'm like, you have to be kidding me, don't, not good to, tick the IRS off. So needless to say, we fired that client.
So, and then there was another story you were telling me something about, now something I didn't know is that, and this makes sense, that the IRS would go back and check your bank statements and so forth, and so you were telling me something about a boat, that one?
Oh yeah, we've had a client that they had not filed taxes for several years, and the IRS finally came knocking and said, hey, we need our returns. So we filed up we're in the process of working with this client to file back tax returns. We discovered that there were some payroll taxes that were due. So as part of the compliance process, we need to send current bank statements and, to the IRS. And, on the bank statements are dining out and, trips to here, buying gas for a boat. Needless to say, again, that's a former client, and they're not too happy. The IRS is not too happy about them spending their money on unnecessary items, right, and not paying them.
Go figure.
Yeah, just go figure.
Oh gosh, that's funny. So let's see, another one was Social Security tales.
Yes, on this is just a quick kind of a PSA announcement is that Social Security is not sending out their annual benefit statements to people anymore. I think they're going to send them out once every 5 years. You should go on to Social Security website and create an account so you can check that statement each year, because if your income is not posted, by the time you would find out when you go to get your benefits and you see a big goose egg in one of the years, your retirement benefits could be greatly affected. As you know, what happens when you have a zero and an average, it really, brings that average down. So just check those Social Security statements.
That's funny that you were saying that our daughter got her progress report in, and I'm like, what's this? Oh, I passed that in. That's an F. I said, that's a zero. That's not good. So let's get that fixed. She said, here it is. I said, oh, I think your teacher missed it. So that's important. No goose eggs. All right, so let's see. So IRS negotiation. See, these are scary, just let alone all by themselves.
Yeah, IRS, those don't need to be scary. And I think the general public is scared of the IRS knocking on their door. And, there's so many myths and horror stories out there. But you don't need to be afraid, and you don't need to do it alone. You can negotiate with the IRS. If you have, back taxes that haven't been paid, and you don't have the means going forward. Let's negotiate with them and, get you off on a clean path so that you can now get this off your back. It helps in so many other areas because when you're in that situation, you have liens. You're potentially going to get levied, and those liens affect your credit report. It affects refinancing, a home to get a lower rate on a mortgage, all of those things. So again, don't be afraid to negotiate a little bit. Ask for, even on penalties and interest. It doesn't hurt to ask to have things abated or waived.
So Kim, you can get a deal with the IRS?
Yes, you can, and we have gotten
We
many,
know how much we like deals, don't we?
Yes, yes,
That's pretty good. I really didn't know that. So that's, but that's great that you can certainly ask. It can't hurt.
It does
Very
not.
cool. So the other topic, or the last one, I guess, is watch your financial statements. You were talking about, I think, people that don't understand them?
Yeah, and I think that's, as a business owner, I think it's important, for each business owner to understand what the balance sheet and the profit and loss statement means. I don't expect every client to walk in here and know how to get every number on there, but they should know, okay, if you're looking at a balance sheet, how much cash do I have? How much is liquid? Where can I find that on this paperwork or in your tax return? How much do I owe people? Where can I find that? Do I owe more than I have in cash and assets? It's just important to really be aware and, working with someone that you feel confident that you can ask questions, and they're not going to either talk down to you or make you feel stupid. You want to be able to know, where these numbers come from and how they're generated. And whether you're working, in a business that you have your own bookkeeper or financial person in-house helping you, or if it's an outside person, if it's your wife or whoever, it's a good thing to, just keep an eye on it, and you can see trends. And, if you look at this year versus last year, or this year versus 3 years ago, and it helps you to plan, too, for the future. What do you expect in, next year, 3 years, 5 years, 10 years down the road? And, you can get a lot of benefit out of it.
That is great. And we always, that's one of the things we tell our clients, too. You really need to know your financial statements and stay on top of that. Even in a personal situation, you need to know, you want to make sure that you're either stable or increasing. You don't want to watch that needle go down. So
no, we don't want to operate like the federal government and deficit spending all the time.
We can't print money.
No.
Well, at least not legally we can. So
yeah, that's true.
We'd like to operate like that.
Yeah, one of the
yeah. Isn't that the truth?
yeah.
Kim, can you let's see, I don't know if there's any questions, but I have a question.
Sure.
And it's actually about our next speaker. Well, if you just hang on just one second. So
sure.
Obviously you can hang out and check out our blog at financialclassroom.com, and you can like us on Facebook. And anytime you have any questions, you can send them to me at financialfreedomclassroom.com. And please share so that everybody can gain from the knowledge. So our next speaker is with Gene Hamilton. He's coming on next month. I know we're talking a lot about taxes, but again, it is one of our biggest expenses. And we're doing a Section 105 plan because we want to claim our health care expenses on the Schedule C as opposed to the A. And can you just quickly explain the benefit of that?
Oh, Section 105 plans are one of the most underutilized tax tools for small business owners. If you are a business owner and have a spouse that you can put on a payroll and have them as a bona fide employee, you can take expenses that are pretty much phased out, because in order to get any benefit from out-of-pocket medical expenses, one, you need to be able to itemize your deductions, and two, those medical expenses need to be greater than 10% of your adjusted gross income. And for the average family, you know, even at $100,000 worth of adjusted gross income, they would need more than $10,000 worth of out-of-pocket medical expenses just to have $1 deductible.
Yeah.
Now you take those expenses that you're paying anyways, and those expenses include eyeglasses, prescription medication, chiropractic, dental, anything that's a medical expense that's co-pays, and now you're putting it on your Schedule C. Now you're saving potentially 15.3% in self-employment tax plus your tax bracket. And if, you know, if you're in a 25% tax bracket, you know, that is a 40% tax saving. So you take that $10,000 and now you've saved $4,000 in taxes. It's just great. Cha-ching, that's right. I like that one.
I found it.
Let's ring that. Let's ring that register. So.
Oh, that's awesome. So I'm glad. Thank you for telling us a little bit more about that. But I mean, it's just, I mean, I'm excited because I think it's going to make a big difference, and it definitely. I mean, it's worth it to set it up and to do it, and because otherwise you get nothing. Right? I mean, you get goose egg. So.
Right, and those are one of my most favorite tax deductions is taking something that you spend currently and it's non-deductible and turning it into a tax deduction. Right. You know what, and getting that tax deduction on that Schedule C is just even sweeter.
Oh yeah.
You know, and you know, I'm sure your family, you know, could use an extra $4,000. That $4,000 could fund somebody's Roth IRA or traditional IRA or a retirement plan. It could be a vacation. Who knows?
That's what I was going to say. I'm like, no, we're going on vacation.
Yeah, yeah. Or it's something that you can invest back into yourself, you know, or into the business. You can take a class or, you know, buy something that's going to enhance your ability to make additional income.
Right, but that class that you take could also be tax deductible.
That's right. So you're now really parlaying that that tax savings. So
that's right. Oh wow. Well, thanks so much, Kim. I think it's so important. I know it's, again, you know, just kind of going over this, but really at this time of year, too, I think that people, I mean, we're coming to the end of the year. You can capture these savings if you start to take action now, even this late in the game, because planning is key, and you need to start moving towards that and getting the stuff in place. So,
and you know, I tell my clients, you know, if we start planning now, we have a full tool bag for, you know, planning for 2015.
Yeah.
As we move into 2016, some of those tools are going to be gone away, and we can't use them for 15. We could use them for 16, but now, you know, it's great to have that conversation. One quick reminder for, you know, because you do have a lot of traders. Again, if they're interested in making that market-to-market election to become a professional trader, it's too late for 2015, but for 2016, they need to make that election by the date of their tax return on April 15th of 2016, if they want it for 2016. So, and again, that's one of those things you need to talk to your professional about and to determine if it's something that is a good fit for you.
Right. I mean, I know that there are some pretty stringent rules about that. So definitely seeking your professional is really key. And so
but don't and
do it
wrong.
You
just don't want to miss that. Exactly. You want to be sure about it because you have to ask IRS to get out of that election.
Right. Right.
Uh,
You know, I mean, and maybe this is this can be a topic maybe for another time if you'd come back to talk to us. But like, how could, if they don't meet professional tax status, how could they set up a business? To, you know, and maybe that'll be a topic for another time. You know, in
Yeah.
that might be a good thing, just to talk about maybe what you do, and then how could you turn something into a business, and just
Yeah.
maybe we
Yeah,
could talk about that.
Yeah, we could definitely talk about that. I think that's a good teaser, and we could talk about entity selection and some benefits and pros and cons of how you set up your business, or you know, if you're a trader, how you trade.
Yeah.
It can make a big difference in that bottom line tax liability you have.
Oh, that's awesome. So I'm gonna make sure. Well, I mean, I talk to you regularly anyway, so
Yeah.
we will set up a time probably next year to do that. So
That sounds great. I'd love to.
Oh, that's awesome. All right, we have you committed.
All right, sounds great. Thank you so much. I look forward to next month's webinar.
Jean? Yeah, with Jean. Great.
Yes.
Thank you so much. And
You're
I'm
welcome.
going to show my picture that we took tonight outside.
Yes.
Look at that.
Beautiful.
Isn't that awesome? It was,
Yep.
and it doesn't even show. It doesn't really show the how beautiful it was, but that was just amazing. I yelled at everybody in the house, "Get out here! Check it out!" So,
Yep.
yes, from Barnstead, New Hampshire. There it is.
Nice.
Thanks so much, Kim. I really
Thank you,
appreciate
Kim.
it.
Thank you, John.
You're welcome. Bye-bye.
Take care. Good night,
Take
everybody.
care. Good night.
Good night, everyone.